Our first presenter is Chris Canal, the CEO and Managing Director of Challenger Gold with the ticker code CEL. Challenger is building momentum across two significant South American gold and copper projects, and Challenger's Ecuador projects now host 9.1 million ounces of gold equivalent and lie immediately south of Lumina's gold 20.5 million ounces Cangrejos deposit. Lumina Gold is currently a target for takeover of Canadian $580 million. So with scale, strategic location and infrastructure advantages, Challenger is well positioned to benefit from rising investor interest in the gold sector. Chris, thanks for joining me.
Thanks, Jane. It's a pleasure to be here. So look, firstly, I'll do a quick snapshot of Challenger. We've been listed 5 years. We have two assets, both in South America. The lead is very much our Hualilan Gold Project in Argentina. We've taken it from exploration to 2.8 million ounces open in all directions. And then in Ecuador, we've got a large project. Again, we've taken it from exploration through. We've got a 9.1 million ounce resource. That resource sits next to Lumina Gold. It's the second half of that deposit split by a tenement boundary. Market cap about 135 million Aussie. And board and management has a significant stake. We've got 27% of the company. So, yeah, we have skin in the game and it's meaningful for us. What's our pathway? So, when the market, over the past 3 years, and now thankfully the gloom has lifted, there really wasn't a pathway for a developer like us to get into production. So what we did is January this year, we signed a toll milling agreement with a mill about 160 kilometres down the road. As part of that, we had the mill owner take a strategic stake in us. That way their interests align with us. And we processed 3% of our ore body. It's about 90,000 ounces that we put through that mill of 2.8 million. It's high grade, 6.3 grams gold, 40 grams silver, highly profitable. It's a WA-style toll milling agreement where we batch process, so it's low risk. And that toll milling of 3% of the ore body funds a sufficient cash to effectively cover the build of the larger operation. And we unlock 150,000 ounce a year plus producer from that for a minimal give up. And look, the other point is we're fully permitted production. So, there's not that many developers that are fully permitted for production. The other key point Jane touched on, so this map here is our project in Ecuador. The blue is Lumina Gold. Lumina has a 20.5 million ounce gold resource running about a half a gram gold equivalent. In gold equivalents, when you roll into copper and silver, they've got about 26 million ounces. We're 6 kilometres away. We've got 9.1 million ounces in these two deposits, and that's from 5 of 15 anomalies. We've drilled most of them. They're all mineralised. Lumina has been bid for by CMOC Group, a large Chinese producer, for $581 million Canadian. You sort of roll that across on a per ounce basis, and our net 7 million ounces, because we only own half of the top deposit, is worth about $170 million, which is more than our market cap. And what this does is, I'm not going to tell you that the same person's going to pay us 172 million, but it certainly shines a light on the value we have in Ecuador that the market is giving us zero value for, because we're valued purely on Argentina. And we were running a process to divest that asset. Everything's on hold now while we sort of try and engage with the buyer of Lumina, because it makes perfect sense for the buyer of Lumina to buy us. It's compelling. On the board, very quickly, in management team, sort of Mike Zibic, COO. We pinched Mike from Barrick. Mike was running a 400,000 ounce a year gold mine for Barrick in Argentina. We've also put on a general manager for Hualilan recently and a technical services director. We're building out the mining team because we will be toll milling or mining in October, and we'll be toll milling our ore through the toll milling plant from November and pouring gold. So we're very close to production. Strategic shareholder, the mill owner, Eduardo Elstein, is an Argentinian billionaire, and BlackRock, the world's largest mining fund, has a 10% stake in us as well. I won't say too much in Argentina. You've got a new president, a new mining act. The country has sort of totally changed as a mining investment destination, which is why you've got BHP spending $3 billion, buying into the Jose Maria project, of why you've got Rio buying Salars in the country. Argentina is now a favoured mining destination. A little bit about the project. That 2.8 million ounces has a high-grade core, 1.5 million ounces at better than 5. The key to that core is, I'm showing you a map of it there, a long section. We've got a resource down to 450 metres. Our deepest hole ended in 4 metres at almost 6 grams gold, a kilometre deep. If this was in Western Australia, it would have been drilled out to 800 metres and we'd probably have almost double the resource. So it's open in all directions. We've got high-grade mineralisation, 2 kilometres north along strike, 600 metres south. We've only just scratched the surface in Hualilan. And this is just a visual of what it looks like. You can see there the deepest hole on that section, 28 metres at 5, and then the shallower, lower grade material. The deposit's wide open at depth. We just simply haven't had the money to continue to drilling in the previous climate. We'll now do that after we sort of get through toll milling and we're generating a cash flow. And we'll drill that. We'll extend the ore body out of cash. We've got a big portfolio there. We've locked up the whole belt. We've got over 600 square kilometres, and you can see there we've got numerous sort of high grade plays at surface. We've got some exciting regional targets, again, that we will drill once we sort of start generating cash flow from November. Toll milling, I've been through this. Probably the point I'll make with toll milling is this is our toll milling inventory. We've got 450,000 tonnes. It's all indicated. It's in 3 pits, high grade, low risk. Additionally, we've got another 120,000 tonnes or 119,000 tonnes of material that's in a 4th pit, and inferred material we haven't included. So we've got the ability to toll mill for 4 years if we want to. And the way toll milling has been designed, it's been designed to move straight into the larger 150,000 ounce a year plus. So we've got these 4 small toll milling pits in green. We only use the 3 to the left. We start in the Sanchez pit because it's a 7.5 gram pit with a 1-to-1 strip. The waste from Sanchez and Norte are used to build a ramp to get us into this sort of southern pit, the Magnata pit. And then instead of dumping all the waste from that pit into waste dumps, we use it to build ramps to get to the top of the ridge lines, both sides of the deposit. And that allows us to, at the end of year 2, while we've got a year gap that we're toll milling and not mining, we can seamlessly move into the larger operation. And the whole operation's been designed to do that. Look, this Gantt chart, there's a lot for us to do. We're on track to do it. We're about a week ahead of schedule. And then in terms of, the larger projects, just what does it look like? We put out a scoping study to the market about 18 months ago, focused on the high-grade core, 120,000 ounces a year, ultra-low-grade gold, ultra-low capex, really high margin, put us in the top 20 of Australian producers. It won't be like that. So what I'm showing you here is the high-grade scoping study in the brown with the underground workings. We ran something internal in September at $1,800 gold. We've had Whittle Consulting, which is sort of the premier, mining consultancy group, doing what they call an enterprise optimization study. It's a bit like AI for mining. They divide that big pit of ours into over 75 phases. They schedule it. They look at putting more ore through, less ore through, effectively to come out with the larger value, the largest value of what we can do. And, when you look at where Whittle get to now, we'll do a sort of study to outline this at the back end of the year, but it will be a globally significant operation, plus 150,000 ounces a year, plus 12.5-year mine life. It's a much larger project in the scoping study, and there will be a number of mid-tiers that will have their eye on this as soon as we sort of get these results out to the market and it's understood. But in the meantime, we'll be sort of producing gold from November. And then the other wildcard is our Ecuador assets. We'll spend a minute or two on the Ecuador assets. Again, we sit right next to Lumina Gold, $581 million takeover there. Like on like, it values our Ecuador assets at $170 million. And the 2 resources we have there are in the black box. This is a map showing gold in soil anomalies. We've drilled 4.5 of these to get 9 million ounces. We've got another 8 that we haven't drilled out. We've actually put holes in all of those except 2, and they're all mineralised. We've got 400 and 500 metre intercepts, very similar to what we've got on the other anomalies in those. And we do have a high-grade core of mineralisation that Lumina Gold does not have. So, there's compelling reasons for whoever bought Lumina, CMOC, to come and take a good look at us, because we provide that high-grade feed to start their plan off. And we also don't have a royalty, whereas there is a big streaming and royalty deal over the Lumina ground, which potentially sort of lessens the revenue in the first sort of 10 years of production. So, look, thank you very much for that. And we'll take some questions, Jane.
Wonderful. Thank you for that, Chris. And look, you have outlined the significant scale across both Argentina and Ecuador. Look, after hearing, both projects and the strategy side by side, can you just walk us through how you plan to balance that development timing and capital allocation between the two?
Yeah, so look, the beauty of the toll milling is that it doesn't cost much at all to get us into production. Yeah, we do have an agreement with Lumina where they are, they've got an obligation to fund our startup costs, so minimal amount of money to start toll milling. We've got a pre-feasibility study due in the next fortnight that will define the numbers. But look, it's a big number of cash flow. It's enough cash flow over 3 years that really it gives us the money we need to finish the work on the larger project and then build it. And as I said, the way it's been designed is that we toll mill for 3 years and then really it goes seamlessly into the larger operation. Our timelines are all around that. And then look, with Ecuador, really we were running a process to sell that. That process is halted to see if we can engage with CMOC, the buyer of Lumina Gold. And then if not, the downside for us is, we've had a number of approaches post the Lumina takeover, Canadian groups who want to buy it for shares, which again would unlock that value. So, look, there's a lot to do, but it can be juggled.
Thank you, Chris. And just further to that, I guess, and you probably might not be able to answer this one, but the projects are surrounded by major deposits in South America. You might not be able to comment, but is there strategic interest or potential for partnerships that might accelerate that growth?
Look, in Ecuador, yes, we get calls all the time. Argentina, we do get calls, but in terms of strategic partnership, I think we've now got a clear pathway that gets us into production and a large producer in Argentina. So Argentina's not for sale. Ecuador, look, yeah, we're engaging with Lumina's buyer to see what comes of that. But, look, we're open for all deals. And yes, there is interest out there.
And look, just finally, again, you touched on it, but what should shareholders be looking forward to from a news flow perspective in the next 3 to 6 months?
So from a news flow perspective, you're going to have, a pre-feasibility study that outlines just how much cash toll milling generates, and I suspect that'll surprise the market. You'll then have milestones around signing a contract to drill and blast with AuEq, signing a mining contract, signing trucking contracts, producing first ore, trucking first ore, that mill starting production, and then really sort of November, December, you're looking at first gold and then cash, which will be nice.
Absolutely. We've been working with Challenger for quite some time, so it's very exciting to see that we'll be coming into production later this year. So, Chris, thank you so much for the update. And if we've missed any of your questions, please feel free to reach out via the contact details, which can be found at the bottom of the ASX releases, or alternatively via info@janemorganmanagement.com.au. But Chris, thanks for joining us.
Thanks, Jane. Bye-bye.